Hello, folks. Welcome to Transitional Market Action. Dave Russell here. And, I think for a day, we're all British. And it's all about Brexit, and nothing else matters. There is one thing that was somewhat interesting. There was this, interesting for the pharma stocks. There was a drug thing happening. Let me actually jump over here to IBB because we put it on Research Lab under IBB. I think I actually put in the wrong little abbreviation. It's bullish. It's basically the IPAB, it's called. And there's an article, if you go here, there's an actual article you can link to and take a look at it. Basically, this means they're not going to regulate drug prices this year, or at least that issue is gone for now. Good for pharma biotech. That's interesting, but overall, we had another opinion poll today showing continued support for exit. There's something else I want to point out. First of all, we did a hedge on the SPY, and this is, to me, this is not a good environment to be really doing much of anything. Having a downside hedge makes sense. I tend to think that today could end badly because this opinion poll, it's not giving us the hope that we wanted to see. And the thing is, I think, I don't know how British things work, but I have to imagine that by the time we open tomorrow, if this is looking like it's an exit, the S&P could open up down. I mean, we could open lower. And it makes sense just to have a put spread. So we were citing this, the 207, 205 SPY put spread for 60 cents or less. Now, some things I want to point out. My morning note this morning, I really looked through these things. And one of the things I think that's important to realize about this is that the market is really not pricing this in. And, what happens if in the last 4 hours people suddenly start reading the polls and saying, oh, this could happen? Well, that's interesting. There's some other stuff I think is interesting. And, look, this is not 2007 or 2009 or whatever, 2008, when the mortgage crisis was happening. This is not... this is like one of these things like when you when you're strong and healthy and then you cut your hand and it hurts for a day. I don't see this becoming a major thing that lasts like the mortgage system collapsing of the United States. But it's going to be painful for the next 48 hours. And I think it's important to realize that we have the potential for this to be a little bit like 2008. When what I mean by that is, and I'm not saying we're going to fall like that. In 2008, the S&P had a falling 200-day moving average. We don't have that now in the S&P. This market does not have the potential, in my opinion, for a sustained drop. Technically, it's very bullish, but we could drop to 2000 or 2020. We could go slamming down to that 200-day and come right back. And I think that's more the sort of thing that makes sense to be kind of thinking about here. Now let's take a look at some of these things, because when I say 2008, the thing about 2008 was it started with one thing and then it spread to something else, and then people freak out. It started with it didn't start with Lehman. It started with a company called New Century Financial, which did subprime mortgages, and they blew up in early 2007. But aside from that, the mortgage thing was first it was Fannie, then it was Lehman, then it was Merrill, then it was this, then it was Bear, boom, boom, boom. They all just hit one thing after another after another. Well, we have a little bit of potential for that. Italy and France, these are both articles that came out this morning. Let's actually take a look here at these, because these are showing that basically the anti-European forces in both, Italy and France, which are two of the major, countries, obviously, of the EU. Now these people, there's this, her name, and I know that the woman in France is Marine Le Pen, and she was the daughter of this other guy who was this Eurosceptic. And so both of these articles, I think, all I'm saying is this is the potential here for this to just kind of, get worse. And I'm not saying you want to bet on that happening. I don't think that's a smart thing to do. But what I'm saying is I think the risk is in this potential now of something bad and then something worse. I mean, what happens if it looks like Europe is going to, what happens if it looks like Brexit succeeds? Then what happens is suddenly France and Italy are on the table. And those people in France and Italy are going to announce referenda or something like that. And they're going to have traction. And it's going to go from bad to worse. And then we hit the 200-day or we hit 2,000 on the S&P. And then we say, you know what, it doesn't matter really. Because all these things are very long-term, unclear negatives. So the thing I'm just saying here is that there's the potential for this, I think, to go from bad to worse. And I think the way to position for that is a spread. Because if it doesn't happen, this market could just fly higher. Like I said, this is like a very bad environment for trading. And I tend to think, though, that the fear thing could kind of take over some more. The other thing that's interesting is the 10-day moving average has been coming down here. And if we go back under the 10-day, under the 50-day, this is that's not bullish, and people are going to see that. A failed breakout of the 50-day moving average, a failure at the falling 10-day. We're right in the middle of the range, and I'll tell you, one of the things that I've kind of learned from losing money is when you have something in the middle of a range, even if you're bullish, it really behooves you to let that range get tested. And I think right now, 2040 could easily happen. 2020 could happen, and 2000 could happen. So that's what we put up here. Again, I'm not saying that we want to bet on these things happening, but I think right now it makes more sense just to be guarded. So I think these are the levels. We cited this in the SPY hedge this morning on Inside Options Pro. Again, I'm not trying to predict the end of the world. I think Brexit is one of these things that even if it does happen, again, it doesn't result in anything right away. It basically results in a bunch of people calling meetings. And then we're going to sit around and wait for the meetings. And then by the time that happens, we're going to have another jobs report. We're going to have ISM. We're going to have, stuff with U.S. politics. So all this stuff it'll just get pushed to the back burner. And I just want to point that out. I don't think that you're going to see Brexit bring down the world system. I don't believe personally that events do that. What happens is 2008 was a combination of a recession and a credit crisis. Well, we don't have anything like that right now. And I don't believe that events like this cause recessions. I think that recessions are caused by economic cycles. Anyway, that's my own little thoughts here. The options paper today was mostly bullish. Western Refining, this has December 17 calls bought. A lot of short interest in this. MGM has the $25 calls bought expiring on the 8th of July. This has been a pretty bullish stock. It's sitting in an old high. I don't know what's happening in this stock, but it's bullish. There's something good happening in this name, and I think we want to stay on top of this one. We've had some good paper in it. It's fixing for a breakout. Form Factor. Now, this is a really obscure semiconductor company that had the October 9 calls bought. Look, I mean, this is probably not going to be totally immune to Brexit, but a company like this, they had some weird issues where they it's not really clear. It's a relatively small company. If you look on Research Lab, we have the actual links to the earnings reports and stuff. And I want to point out that, use Research Lab because, we're putting this stuff in, and a lot of the information is there. So this company basically, they had good guidance back on the 27th of April. Form Factor tried to rally, got slammed lower, and now it's just been going straight up. This is a small cap company with a very unique story. And, I don't know if it's good or bad. My point is a stock like this can rally in a bad market. And I think that's the interesting thing to realize here. It's just its own weird little stock. And companies like this, they can be uncorrelated. So it's interesting. It's one of the reasons I did that. Verifone, PAY, they had some paper early. We passed on this because these are high delta contracts. We take a look here. We can actually see it at this initial rally. They bought the call somewhere around here. And I got to say, to me, this is not what I like to do. If you look at the stock on like a 10-day chart with hourly candles here in the Options House platform, what we can basically see is a lot of negative momentum. And, the 100-hour is falling. That's often something that a stock won't rally while that's happening. The 20 and 30-day are falling. In my opinion, a stock like this is not capable of making a sustained move to the upside because this momentum will hit it and slow it down. And so for me, the idea of buying high delta calls that are pretty much slightly in the money, these calls right here, the July 19s, with like 50 delta, if this stock pulls back just a little and retests recent lows, I mean, those calls are zilch real quick. So I just think this is not a great idea. We did have the paper. Mikey put it on the log, but then we let it go from there. We did not want to follow that. There is some call buying in the GLD. Now, right now, I've been watching this thing back and forth, and it looks to me now that GLD is basically going to be like SPY puts or VIX. I mean, this is just an inverse correlation now. Let's take a look here at look at like a 4-hour chart of gold. It's been moving higher at the same time that SPY has been just kind of moving lower. So we're seeing just a good old fear trade here. For me, I just think, the GLD, they're buying the quarterly calls, the 30th of June, 123 calls in the GLD fund. And, I think this is just one of these things where when you have all this correlation, you just basically want to decide, what is my position? There's only one trade here. It's good news, bad news. Brexit happens or it doesn't happen. If Brexit happens, gold goes up, SPY goes down, VIX goes up. That's all there is to it. And everything's going to follow that, and the opposite is true the other way. So, it really makes sense to have one trade. And don't be like long gold and long S&P. Just if you think it's not going to happen or whatever it is, just realize that all these things now are going to correlate around this event. It's not clearly predictable, and it just isn't really clear. So I think right now, like I said, doing nothing can be, like Cool Hand Luke. Sometimes nothing can be a pretty cool hand. Taking a look, though, at some of the other things, I'm trying to identify some names that have been strong that I think we want to keep on our list. And, I'm noticing that Walmart, which this does make a lot of sense when you think about it. Walmart is like one of the ultimate safety trades. This stock has been kind of just pushing higher on Brexit. Amid the whole Brexit thing, I would not be, this is breaking a resistance level. I would not be surprised to see upside continuation in Walmart. Another thing that seems to be emerging as a new safety trade is this AMJ. And it makes a lot of sense. This is the pipeline ETF, or ETN, an exchange traded note. It makes a lot of sense. You think about it. I gotta say something that's really interesting, and I don't think a lot of people saw this because they don't look at the credit market. But in 2008, I remember October 2008, and the only companies that were able to issue bonds at that time were utility stocks because they have real assets. Now, obviously, again, this is not too much, but this is similar. First of all, my guys in the credit market are telling me pretty clearly that debt issuance has hit the wall. No one's selling anything more than 3 months out, and there's more trading, less issuance. So that's one thing right there. But that'll go away when Brexit does. My point about AMJ is pipelines are real assets. These companies have good dividends. A lot of the companies in this ETN trade for only a little bit more than book value. We've seen people coming into this fund in a big way. I think it was Cooperman, but some of these big guys who are looking for real value. I think you're looking at businesses now that are basically, these pipelines are not going to go away, and they're going to make money for the next 20 years. And if you're like a kind of long-term investor, the AMJ just makes a ton of sense. And I think it's one of those things where Brexit or no Brexit, even if oil sells off, something like AMJ now, these are real assets, and they have dividends. So the thing is, even if oil sells off, what happens if bond prices go up, yields go down, then we're back to utilities, and pipelines could become the new utilities, is what I'm saying. They're trading like it. And I think we want to keep this on our list because this is the sort of thing that, if Brexit happens, these are the sort of things that could rally. I also remain very bullish on Children's Place. I know it's an obscure retailer, but they just seem to be doing something right. I mean, right now it could test back lower, but this stock has traded very well. Some of the other ones that I think are interesting, Bristol Myers. This is, I think, just a great name, and it's holding the 50-day, the old resistance level. I basically got shaken out of this, but nonetheless, this is still going to be a pretty strong name. I think this is a really good stock. Activision Blizzard. This is going to, if Brexit happens and this thing gets slammed lower, I'll tell you, if this thing goes under 36, it's a buy. United Healthcare. This thing is just on, I don't know why this stock is so great, but it's amazing how well this thing trades. This pulls back to the old high around 134, 135. This stock, and who knows, say we have this day when there's blood on the streets, and this stock, it could dig down to 130. I think it'd be a lot of support down there. It could go down to this level down here. It could just dig down around in this level. And I think these are some of the things that if we want to be looking, these are stocks that United Healthcare. I don't think they have any. I mean, you can check it, but this is not an international stock. But this is also a member of the Dow. I mean, people forget this is like one of the blue chip stocks in the world now, and no one talks about it. Acadia has been a monster, and this stock has a lot of upside potential. This is a biotech stock that a lot of people have been very bullish on. All their drug information and their data has worked out. This is one that, I'm not sure, but I mean, maybe 30 is the level to watch on this. But the 50-day, the 200-day, all that, I mean, who knows? I mean, in a really ugly market, this thing could even go under 30. It might go down to this old high. Maybe it goes to the low from early May. I'm not really sure, but there's going to be the kind of stock that if it gets demolished and we have a lot of selling, a stock like this, you're going to get an opportunity in it. And I think waiting, being ready, makes a lot of sense. Another one, White Wave Foods. I've been bullish on this. It's been working. The earnings were good. It's mostly a domestic name, I think. This one could get beaten down. We had some calls on this one recently. L3 Communications. This is a high-flying defense contractor. This is going to be something that, this had a great breakout, and it's probably going to have that first pullback in this name when it pulls back, maybe to the 50-day, maybe back to the old high around 130. This is going to be a name that I think you're going to have a lot of interest in. I think L3 is going to be another one. Michael Kors also, this company seems to have gotten its act in gear, whatever that term is. And Ulta Salon. Here's another one that's just been a beast. This could get slammed lower to the 50-day or something, and it could be a good opportunity. So anyway, I want to just build a list. Again, I don't want to try and predict the world is going to end or something. I just think that right now it makes sense just to kind of stand back and let these things pass by. Take a look at some of your questions here. What do you think about American Express? I don't know. American Express seems to me like this could be hazardous. This is a multinational financial kind of stock. I mean, God knows what Brexit could do to this thing. I would absolutely avoid this stock. Is there a telephone number to call in and listen to this? No, there is not, but you can get the archive if you go to Market Action Pro, there will be an archive about 20 or 30 minutes after the webinar. If you don't have access to that, you can email me at david.russell@optionmonster.com, and I'll make sure you get added, because some brokerage customers don't have access to that. We'll go ahead and set you up for it, but you have to contact me. Also, if you want to get my morning strategy note, you can email me at that email address. Let's take a look at some of the questions here. Can we use UVXY to hedge to gain protection on Brexit? I really don't know all these different instruments. They're all pretty much the same thing. And they all have, I'm sorry. I don't know this versus anything else. To me, a SPY put spread, look, by the time you figure out the way this thing works, you're better off just buying a put spread in the SPY, I think, my honest belief. So I think, I think something like this, I don't know. I mean, these things get weird spikes, but there's a lot of confusion in these things. These guys have to roll their futures, and you get a lot of problems with backwardation. I'm sorry, with what do you call it, contango in these things, and you could ultimately end up with something that doesn't do what you think it's going to do. That's what I would tend to think. That put spread to me makes sense, the one I cited. Is it too late to buy Dollar General and Dollar Tree? It's interesting. I was looking at these stocks, and both of these look to me like these are kind of like Walmart. These could be stocks that do well if Brexit happens. But I think these look to me like, if anything, I don't know. I mean, this could pull back some here at this point. It's kind of slowing down. These companies shouldn't move this much. This stock went from around 80 to 92 in a month and a half. I just don't think this is not like Twitter or something. This is a discount retail stock. It does not. It's a good company, but it's not growing that fast. And I think you'll get a pullback in it. And I don't think there's any reason to really, push it. Walmart to me, I think is the better one because it's breaking a clear level, and also Walmart's got good options liquidity. You could do something with Walmart, and the other ones do as well. But the one to me that looks good right now is Walmart. It has not moved as much, and I think it has the potential to take a stab up towards 74. All right. I don't know if SPY straddles are overpriced. I generally don't look at something like that. Um, Look, we generally don't sell premium on this. It's just something that we do a lot of directional stuff, and for me, trying to guess something like selling premium is it's just not a good idea in this environment. This could turn into look. I mean, I'm not going to try and predict stuff, but I don't know if you guys have been watching what's happening in Syria or what's been happening in Latvia. If Brexit votes, I mean, you could see Russia start attacking, and they say, well, the EU is weak now. I'm going to move. Look, I'm not saying it's going to happen, but there's a lot of things that can get a lot worse in the near term that can scare people. And I think that geopolitically, I think Russia's kind of sitting here and waiting. They're saying, hey, if Britain leaves the EU and then we get other people agitating stuff, that's going to weaken. We have Obama as a lame duck president. Now's the time for us to start doing stuff. I mean, you don't really know how much worse this thing is going to get. So I just think I don't think selling premium is a good idea. I think you can see volatility go a lot higher. And I'm not predicting it, but I just think right now the risk is not in your favor. There's 3 or 4 bad things that could happen. Let those happen and then sell your premium. All right, what do I think about SA? You're long the calls in Seabridge Gold, the Jan calls, the 15 calls. I mean, it makes a lot of sense to me because, gold will rally if the S&P, if we have this, bad event. So that's a way because this stock has the ability to really move. And let's look at a longer-term chart. Like I said, this stock should be like $100 stock if you actually, look at their fundamentals. I think that makes a lot of sense. The Jan 15 calls and Seabridge Gold. I think it makes sense just to hold those. Don't trade them. But, I mean, this stock could be at $30 by expiration without too much difficulty. I mean, this stock, if you look at how it traded historically, I mean, it used to be a $30 or $36 stock back in the old days when gold was not a whole lot higher than it is now. So I think something here like Seabridge, holding those calls, long-dated calls, that's why we have calls, because basically it allows you to manage risk. You don't want to trade this thing. It's a really sloppy stock for trading. I know because I've been frustrated with it myself at times. I've mostly made money on it. I've definitely done well in it, but I think that there's been a few times when this has really frustrated me. So I think calls are a good way to manage it. Is call Maine a buy yet? This is an unusual just sort of, let's see the last earnings. They have earnings soon on call Maine. I know I saw it on the list. Revenue missed last time around. I could have swore they have earnings coming out soon. No, they don't. It's in July. Let's see if there's any support here. This is one where I think this is a $40 level. This looks like support. But what I would say is, you want to let the momentum turn to your favor. And at this point, I think you want to let that 20 and 30-day come down. I don't think there's a lot of, real opportunity for a rally in this name right now. I think you want to let the momentum fade, the bearish momentum. All the moving averages are falling. I don't think this stock has the potential for a strong rally right now. I would wait for that 20-day moving average, which is the teal line on my chart, to come down, flatten out, and then move higher. You can listen to market action on your smartphone if you install the Level 3 Express Meet app. Well, that's great news. Thanks for letting us know that. What about FireEye? FireEye had some bullish paper yesterday. We'll take a look over on the Inside Options Pro activity logs. Take a look at that. Let's see. Yeah, so this one had bullish call buying yesterday. Um, this is going to be one where, look, I think there's people who want to own this stock, and I think if it looks like the market's going to rally, this stock I think has the potential to break to the upside. Um, I'll tell you, in general though, these have been pretty difficult trades. Um, I think it has the potential to surge higher, but these kind of trades have been pretty hard to do, and in general, the bearish momentum has won the day. So I think this one could go back down and test the bottom of its triangle down here, which is down closer to like 14. Just not really sure what to make of this one. There's another one when buying inexpensive options makes sense, because if this thing does rip higher, then you've got some inexpensive upside with a lot of time. So I think this is one where, again, it makes sense to use calls, because those calls could go up a lot if good things happen, and if they don't, that's your premium is going to be pretty much all of it you can lose if it doesn't work. So I think it's a very unclear trade. I do think the stock has the potential to rip. I think it's got a lot of short interest. It looks like the selling has faded. And I think it makes sense to own those inexpensive calls. But overall, I wouldn't say that this is a stock worth owning here, because I do think it could go back down a couple of points. Bad things could start happening again, and this could just get slammed lower. So I think you want to manage risk with the calls. That's why we have calls. It's kind of like the C bridge. It really is, call buying is a way to manage risk too. I mean, it limits the amount of money you can lose, and it also ensures that you have that potential to really catch the upside. Another way people are using options to manage risk today is in Cerner. They are basically doing the collar trade in September. So they're buying the $50 puts, and they are selling the $57.50 calls. So this is a collar trade, selling the upside, buying the downside protection. It's interesting. They're basically hedging right at the lows. We have a line drawn here which tells me that there's probably a multi-year low or a multi-year support. See, we have this level here from 2013 at 50. So these guys probably bought it at 50, and now they want to hedge. And then they got that hedge in place under 50. They can't lose any more money. But if it goes over 57.5, then they're out as well. So it's just kind of interesting. This is your classic sort of hedging strategy. This stock here is just it's just drifting aimlessly. I don't think this is a good name over. Well, here's the thing. I don't know if it's a good name right now. This is a long-term growth stock in the sector. It seems like long-term their business is it still has a secular growth, but it could go back down and retest 50. There's no rush in this one right now, I don't think. It's still under that 50-day moving average as well. That's Cerner. Now, Mikey put this one up, which is interesting. It's Yandex. It's a Russian internet stock. They're buying the Friday, July 1st calls at the $22 line in YNDX. Sina has September $50 calls bought. This is the Chinese stock, not the American Synaptics, but this is the Chinese Twitter stock. They own Weibo, which is Twitter-like. The September 50 calls bought in this one. I'll just say, these Chinese stocks have been very confusing. The one that looks most interesting to me is the NetEase. I don't really know why this stock has done so well, but in my opinion, this is by far the best one right now in this Chinese internet group. It does not get a lot of attention, but this company, NTES, has traded very well, and it looks to me like there's something happening in this name. So I want to mention that. I don't understand it well enough to really mention it, and I've been very confused by this Chinese stuff with all this MSCI. Another interesting trade is in VRX. This is a bullish ratio spread. They're buying the $25 calls in September, and they're selling twice as many at the 35 line. So this is a ratio. This is another way to manage risk. Say you're long the stock. Say these people own something like 1,600 shares. They buy these calls and they sell the upside. So basically what happens is they're going to make a ton of money between 25 and 35, and then at 35, their position basically goes away because the spread gets filled, and then let's actually just hide this, hide my studies, which then makes those moving averages go away. You know, the top of the spread is 35, which is pretty much, you know, an area where the stock was kind of, let's see if there's another. It's close to the top of that range, and they're just looking for it to go up. And if it goes up there, give me my money back, I'm done. So this is another thing when you have a stock that's down, doing a ratio spread is a way to get out of it, because basically if it rallies a lot, you know, your calls go away. It's combining a covered call with a vertical. If it rallies a lot, your stock goes away and you make money. It essentially lowers your break-even area if you have a losing position. And I think there's a lot of people who probably have losing positions in VRX. They're buying some puts in General Electric. AUG 28 puts bought in GE. Let's bring back our studies here. Okay. AUG 28 puts, which is a pretty significant drop. This is probably a hedge as well. It's probably got some gamma. And they're just saying, hey, I'm not gamma, I'm sorry, Vega. They're saying, hey, you know, if this thing sells off, you were probably going to see, you know, the volatility will probably, you know, pick up in those. It's not that much. But very often when you have time in something, by buying that kind of hedge, you know, they're not very expensive, and it's a way to just hedge against the drop. And the thing is, if the thing does rally because you don't have a lot of delta, then in the near term, you know, you're not going to actually lose that much money on your hedge. Coca-Cola has put sold, KO, July $45.50 put sold in this name. Pretty much, it's interesting. These are actually in the money. So these people are bullishly neutral in the stock. They're looking for a modest increase, and above that, the options go away. Let's take a look here on the activity log. Here we can see KO. The $45.50 puts were sold. See, the GE puts were only like 22 cents. So that's something looking for, you know, the out-of-the-money sort of thing, the potential drop. But again, it's a cheap hedge. A lot of this stuff we're seeing, it's inexpensive, and I think it's important to realize that. You know, right now, this really is a strange time. And I really don't want to be, like, overly bearish, because I think right now this market has the potential. You know, there's still a lot of positive things on this chart when we look at it. You know, these moving averages are rising. You know, I think this is something that, you know, it's interesting. If you look at the long-term history, the 100-day moving average, it crossed through the 200-day in the beginning of, I think, 2013. And that was the beginning of the bull market that ran in 13, 14, and through, you know, middle of last year. And then basically it fell under, you know, the gray line on my chart, it fell under the 200-day last summer when the market crashed. You can see right here in, you know, October, September, August, September. But before that, let's actually take a look here. We can do something called the interactive zoom, which allows us to see daily candles on a longer-term chart. It slows the chart down a little, but it's also good for studying. If we look here, this was this great run. See, the whole way the gray line is over the green line. It's a nice steady uptrend. That really started, the whole uptrend started in 2012, in Feb of 2012, the gray line passed through the green line, and it stayed above it for a long time. Right here. Come on. Anyway, right there is where it happened, essentially. And it stayed above it all the way through last summer. And now it's back above it again. So I think that's just kind of interesting here. You know, and I just think that, you know, I don't think we have the potential for a sustained drop, but I do think there is that kind of risk of us chopping the range. And I think waiting for the range to be tested makes more sense than messing around in the middle of the range. Do I think RH will continue to run? I really don't know. This stock was like a disaster. I don't know if I'd call this continue to run. Probably not. this is a pretty broken stock. Where do I see? Actually, I want to mention this. Smith and Wesson was really a bad sort of thing on my part, not being more bullish on this. I was kind of distracted by politics and everything else, but this company had just a good earnings report. And as they say, stocks climb walls of worry. There have been some reports saying that gun sales are slowing down. But if you also read Smith & Wesson's last earnings, these guys are introducing new products, and apparently they have some new guns that are like selling well. Of course, when you sell new products, you're usually going to have better margins as well, better pricing. And maybe these guys are eating Ruger's lunch. I don't know. Ruger has not traded nearly as well. But Smith & Wesson here, I think, I have to say I think I was just wrong on this. I think this is probably, when you see this squeezing into a tight range and then the good earnings came out, it was really, wrong of me not to be more aggressively bullish on this. This is also the kind of stock that can run completely on its own. This is a small, nuanced company. And for all we know, something like Brexit could drive money into this stock. People get, not only is it even a fear trade, but it makes politics an issue again. And politics is a driver for this company's business. You feel we're going to rally at the end of the day? It looks like the market turned downward. No, I don't think we're going to rally at the end of the day. I think that there's a greater risk of a weak close. Let's take a look here at the S&P. And, we basically have this bullish ascending triangle that now we've basically broken. It had a false breakout, and now it seems to be failing. I would tend to view that as a negative. I think that this is probably more likely to bleed lower right here. Is there any hope in the Hess calls? Well, these Hess calls got updated with a decent gain, I think, already. So at this point, given the fact they're going to expire soon, I don't think so. Mike Bordos will put out updates on those things. Micron and IP. Micron reports earnings next week. I've actually been pretty bullish on this name, and we had kind of cited it on the pullback to 12. I think this is an interesting name. I do like it. Earnings are in about a week, the 30th. I've liked Micron, and I was recommending it on the pullback to 12. MU, there was another one you asked about. International Paper. I don't know. This is now squeezing into a triangle. This could easily get crushed if Brexit goes the wrong way. There's a triangle here, and I think it could go either way. In some ways, this triangle kind of, I'm not sure exactly, but it looks to me like this is squeezing into some kind of range here. If it goes back under the 50-day, I think it could be bad. So, I don't know if it has a lot of downside risk though. I think it could just get knocked lower and then hold. Because if you look at it, there's a lot of support at 40. See this level going back to last November? I think if you wait for this thing to go down to 40, you'd have probably a pretty good buy in it. You get the 100-day moving average there. I'm going to set a price alert near $40 so the Options House platform will alert us to a pullback. Okay, IP, $40. All right, folks, let's take a look at some of the other questions. Where do I see energy going? Well, I'll tell you, there's a few interesting things today. The API inventories last night were good. The EIA inventories today were bad. Then we also had the Saudi minister came out and said he thinks that the oil, glut is over. So aside from that, I'm not really sure right here in terms of energy. It seems like we have turned in terms of the tide. It seems like the negativity really has kind of broken here. I think there's a lot of support on crude down toward 46 and stuff. I continue to think we're going to consolidate in a range. I don't see any reason to be bullish right now. and I think crude oil can chop around. I would basically be looking for support levels and just waiting if we get the pullback. So for example, to me, XLE, I think you could easily see it chop down around and test under 65, for example, and something like XLE, that sort of thing. It is potentially bullish, but it also is at resistance, and very often when things are at resistance, they just chop around a lot more than you think. I'm not really sure how high the VIX would go if Brexit happens. I don't play around with things like that. I don't actually think this market, like I said, this market, in my opinion, does not have that much downside risk. 2040 is like, if it goes to 2000, that could happen. I mean, it would be like 4 to 5%. It's not that much. I mean, look right here. We had the 100-day falling in August, that massive crash. We don't have anything like that. This was fixing for a breakdown, and we were very bearish going into this. Some of you guys were watching market action then, and we just said you don't want to do anything except we were recommending high vega puts at the time, and they worked. But now I think we're looking at something that is very, very different. We have a rising 50-day. It's over the 200-day. The 100-day is rising. It recently crossed to the 200-day. I don't think we're going to have that much of a pop in volatility. I think there's a lot of volatility that's already in this market. Take a look at this. Something else you can do with the Options House platform. One of the great things about it, it allows you to go through and look at implied volatility. So volatility chart. No, I have this little, let me show you this. All right, anyway. The orange line is implied vol, and the blue line down here is real historic volatility. The thing is that you can clearly see that the orange line is way above. Usually you do not see something like this. You seldom see. So volatility has already gone up. Implied volatility has gone up a lot. After this event happens, I think you're going to see the VIX go up say the worst case thing happens. Here's what I think the worst case, and I don't think Russia is going to do anything. I mean, probably not. I think it's going to be something like this. Brexit happens. The market goes down. The S&P goes down to the 200-day. The people in Italy and France make some noise. People freak out about it. And then in about 1 to 2 days, we hold the 200-day and we rally back, and that's it. There's nothing else. Because then after that, then we just get drawn into this interminable political blathering, and that's what I think is going to happen. And I think I think you'll get a fast pop in the VIX, and then it'll fade, and then you sell your premium. That's what I think. All right, you can remove this by going to display. So you would fade the initial reaction to Brexit. No, I would wait for the selling to run its course. I think it's going to, if we wake up tomorrow to Brexit, the market's going to drop, and it's going to drop more. Then it's going to hold. Then it's going to rebound. Then it's going to retest, and that's when you want to buy it, in my opinion. But you want to watch things like 2040, 2020, and 2000. 2040 is the support level from Q1. The beginning of Q2. This 2040 level. That's where we held earlier in May. Then the 200 days at 2020, and then we have a level from early March around 2000. See, it's actually more like 20. It's this high on March 8th, around 2010. But I think, in a bad scenario, we could just dig around that number and we could try and do the round number. So I think the 2000 level had relevance at other times in the past as well. See, yeah, look back to September of last year, 2000. See, this was the level here where we had the breakout last October. This was the support level in December. And then when we broke 2000, it was just like lights out, down. Then we came back, we tested that. So 2000 to me is a pretty significant level, and we could see that. So I think keep these numbers and just be ready, because I'll tell you, here's what's going to happen. If you try and force this thing now, you're going to be emotionally exhausted, you're going to be confused, and then when the opportunity comes, you're going to miss it. That's what I have found from this sort of thing. AIG, this is just another financial. I mean, I don't know enough about it right now. This company, I think the last earnings were pretty bad in AIG. Earnings miss on investment losses. I don't know. This is going to be a company that I think I think a little bit like Prudential, where you're going to have low interest rates are bad. Actually, these guys got hurt by hedge funds. I think they had in hedge fund losses that hurt them. I really don't know in AIG. I think it's going to be very similar. Is the actual vote on Brexit after the close? No, it starts in Britain at 8 o'clock or 7 o'clock London time. So by the time we're open, they're going to be halfway through it. And I don't know. I mean, I'm going to try and do my best to research it and give you guys good answers. But the thing is I think it's one of these things where you have to realize when there's exogenous events. And by the time you learn the British political system, the event passes, which is really the reason why it's best, in my opinion, just wait it out. Remember, your time is worth money. And if you spend all your time learning something, it's like learning how to speak a language you're only going to use for a day. Well, you know what? It's better just to hire a translator. Not a great analogy. I think you get my point. Apple might also become a safety trade. I know it's just this stock has potential to have some safety. So I would just point that out, that if we have a fear thing here, you could basically see people buying Apple. All right, well, those are most of the things here on my list. Let's take a look. Those are most of the questions as well. It's always good speaking with you guys. Remember, if you want, please email me at david.russell@optionmonster.com if you want to be added to my distribution list. Also, I think there's been some people have not been getting the market action message on the brokerage platform. So I would just kind of point out, if that happens, please keep my email, david.russell@optionmonster.com, and I will send you the link. Because they're working on it, but these things every now and then pop up. All right, folks. Hope everyone has a great and profitable end of the trading day. We'll be back tomorrow. Take care.